Hi, it's Drew Tignanelli. This is our August 2025 update. The great day is over, and we're on to the month of August. Michael?
Good to be with you here again. It's amazing how quickly the years are going by.
No,
Uh,
that's true. We have some good articles coming out.
yeah, talk about the article you wrote.
I got an article just called Clean Energy Disconnect, and it talks about, how government feels that they provide all these credits and it's spurring the innovation of the economy. I personally disagree. I think government support normally discourages the advancement of something into the market. Because when you give somebody a $7,500 tax credit buying an electric vehicle, in my opinion, Elon Musk and Tesla and other EV companies are just going to keep their prices high and skim a lot of cream off the top because people are buying the cars because they think they're getting a $7,500 tax credit. And I talk about how in other countries they don't necessarily give credits, but yet their EV vehicles are far more adopted and far cheaper. Actually, if you think about it, Mike, an electric vehicle should be a lot cheaper to build than a combustion engine. I mean, you're
Oh yeah, a
you're
lot less parts.
building you're building something, Mike, that has little explosions in it on
hmm
a multi-second, you know, and uh,
So
and
there'll be some changes coming to those credits, and we'll talk about those in the planning section. But we also have two webinars, or actually, I'm sorry, two videos this week that will be hitting our YouTube channels. The first one probably will come out, probably sooner than this video. It'll probably already be out, but we'll put a link to it down here. How one big beautiful bill impacts retirees, and we're going to cover a little bit of that in our planning section today. And then towards the end
it
of
explains the whole bill. But our thought process was mainly talking about retirees, but we cover all the things that the bill does.
Yeah. And then towards the end of August, we'll have another video coming out, Smart Money Moves to Make in Each Decade of Your Life.
Yeah, that was a good one. All
Those will be
right.
coming out
And
soon.
then markets are still up right now and bonds
Yeah.
have stabilized. So that's, bonds were moving up a little too fast. They finally slowed down and now they're just kind of hovering in the 4.5 range, let's call it. But the Federal Reserve refuses to cut interest rates. So the short end
Yep.
is actually as high as the long end.
Yeah, and you know what? I don't think there's any other news story I've been listening to in the past couple weeks more so than about the president and his feelings towards Jerome Powell. But as the president said in a press conference, I think either today or yesterday, Jerome will be his term will end in about 8 months, at which point the president will appoint a new federal chair, probably one who's much more keen on cutting interest rates. But even with that, we still expect to see interest rate cuts at some point, during this year.
That was probably logical. It just depends. It just depends. Inflation is down,
Well, it's up.
but
It
it
ticked up from last month.
ticked up so small it wasn't even worth talking about personally. But they make a big deal out of it. The trend isn't down like they were hoping it would keep going. And
Right.
so we'll see what happens next time. And will his tariffs really impact it negatively? And it could. But the beauty of tariffs and inflation is that it's a one-time tick. Once the tariffs take off and have been factored in, it doesn't affect it anymore. That's if they get through with it. Who knows? Every day's a new day when it comes to this administration.
So the other kind of big news in the financial worlds has been the volatility of Bitcoin. Bitcoin towards the beginning of the year dropped dramatically, something near 25%. But now it's back up and it's 20% over its year-to-date starting point. So not something we're recommending, but worth noting how volatile that is.
Well, right now it's getting a lot of uh, support. there's a lot of people coming out throwing money into Bitcoin. And it's really, if you look at it, what's happening, big players are coming in, they're buying up the coins well before other people, and then they throw out something that gets people all excited about it. And next thing you know, a horde of retail investors come in and really push the price higher and higher. There's a lot of people, big institutional people, who are making a lot of money supporting cryptocurrency, and there's no economic benefit to cryptocurrency. It's nothing. It'll always be nothing. Unfortunately, you get a lot of support for it, and it's like the largest Ponzi scheme I've ever seen in my entire life.
But
So we'll
anything you
see.
can speculate on and you can gamble on, you might be able to make money on, but not the way we do it. So big beautiful bill passed, was signed, and now it's up to a bunch of staffers to kind of figure out how to implement these things. But we thought we'd cover some of the tax changes that might be impactful. And one of the first ones is charitable deduction. So if you don't itemize, if you take the standard deduction, normally you don't get much of anything for charitable deduction. Um, but now you can get about $1,000 if you're single or $2,000 if you're married, even if you are not itemizing and taking that standard deduction. Um,
Yeah, but they also did some other things. If you do itemize, starting next year, you're going to lose a 0.5% of your adjusted gross income of whatever itemized deductions you had. So, for example, if you had 10,000, if you had $100,000 of AGI, you'll lose, what is that? $500 of your adjusted gross income. $500, which is a 0.5% of your adjusted gross income, will be knocked off of your charitable contributions. So that's unique. They've never done that before. They've never limited charitable deductions. They've only made it easier to get charitable deductions. This is the first time I've ever seen it in my career.
Yep. As we mentioned at the top, clean energy credits have been adjusted. For the most part, they've accelerated, or I don't know if you call it accelerated, the amount of time that these credits exist for has been shortened. So,
Yes. If you're going to buy an electric vehicle, you need to buy it before September 30th. Because if you do, you get the $7,500 tax credit. If you're going to put in a new HVAC system or insulation or new windows or doors, you need to do it before December 31st of 2025 if you want the big tax credits. And I did mine last year. You know why I did it? Because once Trump was elected, I said, I can imagine they're going to throw these credits out. So I went out and put new units in so that I could get the credit last year. And I think I got $2,000 of credits for that. So if you need a new HVAC system or new windows or door or installation, you want to do that before December 31st of this year. So depending on what your clean energy credit of choice might be, they're going to be phased out and likely before the end of this year. So keep that in mind. Jump if you're going to do it anyway.
yep. So another big tax reduction is seniors are going to get a $6,000 deduction each from 2025 to 2028. So it's only for a few years, but that's out there.
Well, now that seniors is 65 and older, number
Hmm.
one. And this is the supposed tax-free Social Security. And it's there's no truth to this being tax-free Social Security, but it is a nice thing. So it's a nice thing for seniors over 65 if you don't itemize, but you can't honestly say that that's eliminating taxation on Social Security. But anyway, they're saying it.
They're saying it, and big news for anybody who's still in Maryland and hasn't made the flight like Drew has, and many of our clients have to lower tax states. The salt cap deduction is temporarily going up from 10,000 to 40,000 for 2025 and 40,400 for 2026. and it goes up until 2029, and then in 2030 it reverts back to 10,000. But
Right.
that's for people who itemize, who pay a lot in state taxes, like many of our Maryland families do, and that will be probably pretty meaningful.
Yeah, then you also have to keep in mind that these things are being phased out at certain income levels. Now, this one you just talked about, the salt cap, doesn't get phased out until you're up in the
500,000.
250 to $500,000 of income. So, you don't have to worry about getting phased out of this one easily. The one we just talked about, the senior tax credit, that's 75,000 for singles, 150,000 for married, and you're going to start getting phased out on that over the next 100,000 of income. So if you're over 250 married, you get nothing. If you're over 175 single, you get nothing extra. So these are phase outs on all these. The next one we're talking about is tip income.
Yeah, so up to a $25,000 deduction for tips. It phases out at 150,000 single and 300,000 married. I'm not sure of any households that make that kind of money that still work for tips, but I guess there's possible.
Now,
Uh,
keep in mind, though, Mike, that the tips, you still have to pay Social Security and Medicare tax on it, and you still have to pay your state income tax on it. So, when you think about people who get tips, and probably there's a good portion of tips, I don't know this for a fact, but I'll bet you there's a good portion of tips that don't get reported
oh
anyway.
yeah.
Um, I'm sure that there's quite a bit of tips that are still aren't going to be reported. It's only ones that are forced to be reported that they're going to get federal tax free on the first 25,000.
Yeah.
So, and then overtime.
Overtime deductions up to 12,005 for single and 25,000 for married. Phases out at 150,000 single and 300,000 married. It just goes from 2025 to 2028. And I think that's one of the things to notice, about these types of bills is they write them so that they end at the end of a presidential term. So therefore, if the next government doesn't reinstate them, they get to blame them saying they raised taxes. But all that they didn't do is reinstate the credits and things of the previous administration.
Well, the funny thing about this one, though, is overtime and that definition of overtime. And you know this as well as anyone. And that is that like in our company, if a person in our company, one of our advisor type people, put in extra hours, it's not considered overtime, right? Because they're exempt employees, right?
Right,
And then if some of our lower level employees put in extra time, we may have to pay them overtime, right?
right.
It, there's non-exempt and exempt. So it's only a certain hunk of people that get this overtime concept.
Yep, absolutely.
It's
And that
like factory workers, you'll see that a lot with them and so forth. It's
and
really interesting.
yeah, absolutely. And we've got a video coming out on this that goes over more of these. I just hand selected some because I know a lot of people watch this video. They might not always watch the others. This last one I throw in there just because I thought it was funny. Car loan. So you can get up to $10,000 of interest payments as a deduction, 2025 through 2028, on car loans used to purchase new cars assembled in the United States. Uh,
Right.
so
The
that's
100 to 200,000.
yep, versus married.
The one that I get a big kick out of is this Trump account. $1,000 for any kid born in 25, 26, and 27. I don't understand why those
I
three
can't
years.
wait to see them try to administer that.
I'm
It'll be
I'm
2027 before they get the accounts open.
I'm still waiting to figure out how they're going to give you the $1,000. Now, in addition to that, Mike, you're allowed to put 5,000 a year into the account for the kid. We are not going to be advising any parents to put in money to a Trump account other than the free money the government's going to give them because the way they're going to tax that extra 5,000 earnings and capital gains is not beneficial. And you're better off with a 529 plan or maybe just investing it in a custodial account and so forth because it's just it's gonna be taxed like a non-deductible IRA as ordinary income. We're not going to recommend clients to do that.
Yep, yep. So,
Anyway,
well, that's
there's
a
a
good point.
thing in the big beautiful bill that I personally am not a fan of this bill. I really feel it just overcomplicated the tax laws again, and it's bifurcating the tax system. In other words, you got people who are getting tips and getting it tax free and overtime and getting it tax free. You got people of all different incomes that might get this and might not get this and might get this and might not get that. That kind of stuff is not what makes a tax system anyway. It
Yep,
should be fair and even across the whole spectrum. And they could have done something really great, but they threw this stuff at us. So the good news is we get to interpret it and help our clients through it.
absolutely. Hey, they're keeping us in business, right? True.
Well, I guess
They
that
made this
that's
easy. Why would people ask us questions all the time?
and most of them there are lawyers anyway, so they also like this kind of stuff. The more complex it gets, the more you need lawyers.
Yep, absolutely.
Anyway, that's the end of our August update. This is Drew Tignanelli saying God bless.